In this video, we look at the level of gold's ratios to other assets versus the recent average. The gold to silver ratio is moderately above the 2021 to 2025 average, as both are driven by monetary factors, but silver is also driven by the industrial cycle, and markets have growth concerns. The gold to copper ratio has risen even more above the average, as copper is almost entirely driven by industrial factors. The gold to platinum ratio is the most above the average of the precious metals, with platinum driven by its use in autocatalysts, and auto industry growth is slowing. The gold to oil ratio is the highest above the average, as oil has slumped on slowing demand and a rise in supply from the US and other producers. The gold to CRB commodities index ratio is only moderately above the average, as prices of many of these commodities have increased significantly. The gold to S&P 500 ratio is the only one where the ratio is below the average, as the valuations of the stock index are historically high. The gold to Hui index of major gold stocks is moderately above the average, as stocks have still yet to entirely price in the current rise in the gold price as sustainable. The gold to GDX ETF of gold producers is at a similar level above the average to gold to Hui, as is the gold to GDX ETF of gold juniors. Showing the level above the average for all these assets indicates gold is only moderately overvalued, with only the S&P 500 looking overvalued versus gold, and the assets heavily driven by the industrial cycle, oil, platinum, and copper, low versus gold on concerns over industrial growth prospects, while strong gold implies markets expect a continued monetary expansion. For more on gold and other metals and mining stocks, click the link in the description or bio below to go to www.canadianminingreport.com. Canadian Mining Report is not a financial advisor. This video is for informational purposes only and does not constitute investment advice.